There are several factors that are driving retail customer expectations today, and primarily speed to market, ease of use, and convenience. We live in an instant gratification society, so their expectations have changed a little bit. Faster, easier, more convenient. The one thing that we've learned is that customer loyalty is no longer as big of a factor or has as much importance, especially with the younger generations like the millennials. So if they find a better, quicker, more convenient method, they're likely to jump ship. In order to enhance the customer retail experience, bank leadership really needs to take a step back and challenge the status quo and get out of their comfort zone. It's really about understanding how consumers want to engage with their financial institution, which might not be in the traditional sense. And that's all the way from account opening. They might not come to the branch, so you have to look at digital channels. It can also be with their personal finance manager and budgeting tools, as well as just their everyday banking tasks, paying loans, etc. You've got to understand how the consumer wants to engage with the financial institution, and chances are it's not a process that's currently set up. We feel like the expectations between commercial customers and retail customers, that gap is closing. At the end of the day, you have to look at it from an end user perspective and an end user experience. Business customers are still end users, and they have the same expectations as a retail customer does, especially on the engagement side. You've got to provide convenient, flexible ways for that customer, whether retail or business, to engage with you.
Bank leaders should really enhance their commercial customers' experience by highly customizing a digital user experience. This can be through giving them the ability to digitally sign up for merchant payment processing or allow them to pay their indirect loan volume digitally via their website. Uberification is a new term in the industry. Uber and Lyft has kind of coined that phrase where they allow their customers to be paid on demand versus the traditional ACH process. Bankers really need to look towards technology like that so their commercial customers can pay their employees in that on-demand fashion. Banks traditionally lack penetration into their commercial mid-market accounts. So from a merchant acceptance perspective, they really need to look for an online payment solution that can take payments across any platform or a online gateway that allows them to connect into an ERP solution that a commercial mid-market account of a bank would be utilizing. On the retail side, banks need to offer their customers solutions with mobile payments, a P2P solution. They really need to look at digital account opening solutions where their customers can go online and open a checking or savings account on demand in real time. And all these solutions really need to come with a flexible, integrated API so they can talk to their customers either mobile or online. Leadership teams should consider studying fintech companies, specifically fintech companies that offer lending technology. Traditionally, they have user experiences online that are very well regarded. They also have to study their customer interactions. Typically, digital customer interactions are loaded with opportunities for banks to cross-sell and upsell those customers. And lastly, they need to take a hard look at their digital banking solution. It's their only 24/7 by 365 sales team. The idea is that it's always selling while everybody's sleeping.